Unlock stock market success. 15 golden rules. Hi there. Are you ready to unlock the secret to stock market success? In today's video, we're discussing the 15 golden rules of stock investing. These rules are like the cheat codes to the game of investing, and trust me, you don't want to play without them. Prepare to soak up some knowledge, and don't forget to hit that subscribe button to stay updated with our latest content. Golden Rule 1. Never lose money. Never lose money. Remember what Warren Buffett said? Rule number 1, never lose money. Rule number 2, never forget rule number 1. Always prioritize protecting your capital. Every dollar you lose is a dollar you can't reinvest. Have a solid risk management strategy in place. Golden Rule 2. Start small, think big. You don't need a fortune to start investing. In fact, it's better to start with smaller amounts, especially when you're still learning the ropes. This way, you can get a feel for the market, test different strategies, and find what works best for you without risking too much capital. Start by dipping your toes in, gradually increasing your investment amount as you gain experience and confidence. But while you're starting small, don't forget to think big. What are your long-term financial goals? Keep that goal in mind as you invest. Investing is a marathon, not a sprint. Golden Rule 3. Think like an owner. Golden Rule number 3 is all about shifting your mindset. It's about thinking like an owner, not just a trader. When you buy a stock, you're buying a small ownership stake in a real business. Treat your investments like a business owner would. Analyze the fundamentals like revenue, earnings, and debt levels. Pay attention to the company's management team and their track record. Make investment decisions based on logic and reason, not emotion or hype. Take the time to understand the business you're investing in. Think like an owner, and you'll be well on your way to building a portfolio of successful investments. Chapter 4. Golden Rule 4. Invest in what you understand. If you don't understand how a company makes money, how can you make informed decisions? Focus on industries that align with your knowledge. Are you passionate about technology? Then consider investing in tech companies. Stick to what you know for a solid investment portfolio. Chapter 5. Golden Rule 5. Don't try to time the market. Even seasoned professionals with years of experience can't accurately predict short-term market movements consistently. The market is influenced by countless factors, many of which are unpredictable. Instead of trying to predict the unpredictable, focus on what you can control, your investment strategy. Adopt a long-term perspective. The stock market is a vehicle for creating wealth over time, not a get-rich-quick scheme. Stick to your long-term investment plan. Chapter 6. Golden Rule 6. Discipline is key. This rule is all about sticking to your investment plan, no matter what the market throws your way. It's about controlling your emotions and not letting fear or greed dictate your decisions. Stick to your investment strategy. Don't chase after the latest hot stock. When the market takes a tumble and everyone is panicking, stay strong and resist the urge to sell everything. Remember why you invested in the first place. Stick to your plan and ride out the storm. Discipline is what separates successful investors from the rest. Develop a plan, stick to it, and don't let your emotions get the best of you. Chapter 7. Golden Rule. Number 7 is all about protecting yourself financially. You should only invest money you don't need for at least the next 5 years. The stock market is inherently unpredictable in the short term. By investing only excess cash, you create a financial buffer that allows you to ride out market volatility without panicking. It removes the emotional aspect of investing, allowing you to make rational decisions. Pay off high-interest debt, build a solid emergency fund, and then start investing your excess cash. Make sure you have your financial house in order. Chapter 8. Now let's talk about Golden Rule number 8. Always keep tabs on trends. The world of investing is dynamic, constantly evolving. Staying ahead of the curve is essential for long-term success. This means keeping yourself informed about market trends, economic indicators, and geopolitical events that could impact your investments. By staying informed, you'll be better equipped to identify potential opportunities and risks. Knowledge is power, and in the world of investing, that power can translate into significant financial gains. Chapter 9. let's talk about golden rule number 9, which is all about not putting all your eggs in one basket. Diversification. Diversification is about spreading your risk across different asset classes, sectors, and geographical regions. It's about creating a portfolio that can weather market storms and deliver consistent returns over time. If you diversify your portfolio across multiple stocks, bonds, real estate, and other asset classes, the poor performance of one investment won't sink your entire portfolio. Diversification is your safety net, your insurance policy against market turmoil. It's about mitigating risk without sacrificing potential returns. Build a well-rounded portfolio that can stand the test of time. Chapter 10. Golden Rule 10. Buy and go long. This rule is all about embracing the buy and hold strategy, a time-tested approach that involves investing in quality companies for the long term. The beauty of the buy and hold strategy is its simplicity. You're essentially ignoring the short-term noise of the market and focusing on the long-term growth potential of the companies you invest in. By holding on to your investments for the long haul, you allow those fundamentals to play out, potentially leading to significant wealth creation. Be patient, stay the course, and let the magic of compounding work its wonders. Rome wasn't built in a day, and neither is a successful investment portfolio. Chapter 11. Golden Rule 11. Buy when everyone is fearful. This rule is all about being greedy when others are fearful and fearful when others are greedy. It's about taking advantage of market downturns, when stock prices are depressed and fear is running rampant. When fear grips the market, investors tend to sell their holdings indiscriminately, driving down stock prices across the board. This creates an opportunity for savvy investors to buy high-quality companies at a discount. Bear markets and corrections are a natural part of the market cycle. They're not something to be feared, but rather an opportunity to buy low and set yourself up for future profits. Chapter 12. Golden Rule 12. Be objective. This rule is about removing emotions from your investment decisions and relying on facts, data, and analysis. Emotions are your enemy when it comes to investing. Fear can cause you to sell at the worst possible time, and greed can lead you to make rash decisions that you later regret. Approach investing with an objective mindset. Do your research, analyze the numbers, and make investment decisions based on logic and reason. Investing is a game of skill, not luck. Leave your emotions at the door, put on your objective hat, and watch your investment returns soar. Chapter 13. Golden Rule 13. Lock in profit often. This rule is about taking profits periodically, especially after a stock has experienced a significant run-up. By taking profits periodically, you're essentially locking in your gains and reducing your risk. This doesn't mean you need to sell your entire position. You can always hold on to some of your shares if you believe the stock has further upside potential. Investing is about managing risk and maximizing returns. Sometimes, the best way to maximize your returns is to protect the profits you've already made. Secure your gains and reduce your risk. Chapter 14. Golden Rule 14. Run profits, not losses. This rule is about letting your winners run and cutting your losers short. It's about adhering to the age-old adage, let your profits run and cut your losses short. The longer you hold on to a losing stock, the harder it becomes to recover your losses. Sometimes, the best course of action is to simply cut your losses and move on. By selling your winners too soon, you're essentially limiting your upside potential. Let go of your losers and embrace your winners. Chapter 15. Golden Rule 15. Learn from your mistakes. Reflect on your investment decisions, both good and bad, to become a better investor. Everyone makes mistakes, especially in investing. Don't dwell on mistakes, learn and move forward. Track your wins and losses and analyze your decisions. Embrace your mistakes to become a smarter investor. So, there you have it, 15 tried and true rules for navigating the stock investing world. Incorporate these golden rules into your investment strategy and watch your portfolio flourish. Remember, even after a good streak, stay grounded and keep making rational decisions. So tell us, which rule resonates most with you? We'd love to have your thoughts, so drop a comment below and let's continue to learn together.